Hi, in this video, I'm gonna take you to learn the definition of three entities in the basic accounting equation. And we're gonna show you how important it is to learn accounting in our life. So check it out. The definition of assets is the resources that can be owned by some company that have future economic value in it and can be measured and be expressed in money or dollars. There are three classifications of assets. The first classification is convertibility, that divided into current assets and non-current assets. Current assets is an asset that can be easily converted into cash. The example is more likely to be cash, supplies, and inventory. Non-current assets is an asset that can't be easily converted into cash. The example is more likely to be land and trademarks. And then for the second classification of assets is the physical existence. Physical existence divided into tangible assets and intangible assets. Tangible assets is an asset that have physical existence. The example is more likely to be cash, building, properties, and something else like that. And then intangible assets is an asset that doesn't have physical existence. The example is more likely to be like the brand's name or the brand's copyright. And then the last classification is the usage of the assets, that divided into operating assets and non-operating assets. Operating assets is an asset that used in operating needs in some company. The example is more likely to be cash and accounts receivable. And then non-operating assets is an asset that doesn't use in the operating needs in some companies. The example is more likely to be short-term investment and income interest.
Today I want to explain you about liabilities. Liabilities is like when company or persons owe to someone money to buy something. And then the classification of liabilities is first is account payable. Account payable is when company or persons pays goods and services on credit. And then income taxes. Income taxes is like when you get income, you must pay the tax to the government. And then interest payable. Interest payable is like when you owe someone money and they will charge you interest rate. And then accrued expenses. Accrued expenses is like expenses that you should pay it but you not yet paid. Revenue is like when the customers or your buyers are paid the goods in advance. And then mortgage payable is long-term financing used to purchase company.
And right now is about equity. Equity represents the shareholder stake in the company identified on a company balance sheet. The calculation of equity is a company total asset minus its total liabilities and is used in several key financial ratios such as ROE. There are several types of accounts used to record shareholders' equity. Each one is used to store different information about the interest of owner in a business. The type of equity account differs depending on whether a business is organized as a corporation or a partnership. The equity accounts are noted after this. There are two types of equity. The first one is shareholders' equity. Also known as shareholders' equity is the amount of assets given to shareholders after deducting liabilities. And the second one, owner's equity. Owner's equity refers to the amount of ownership you have in your businesses. You can calculate owner's equity by subtracting your liability from your assets. Owner's equity shows you how much available capital your small business has. The examples of equity for corporation is common stock, additional paid-in capital, retained earning, and treasury stock. For example of equity account for partnerships, there are capital and drawings.
And then why accounting is important? Because it helps you track your cash flow, your income, and then tracks your expenses that you spend in period of time.
In my opinion, why accounting is very important is because it helps us to track our income and expenditures in our businesses so we can support our business's needs in financial with our skill by learning accounting.
And now, why accounting is important? Accounting plays a vital role in running a business because it helps me to track income and expenditures, ensure statutory compliance, and provide investor management and governments with quantitative financial information which can be used in making business decisions. For this reason, I agree that accounting is important.